Good morning, everybody, and welcome to this edition of our Weekly Think Tank for Monday, 19th of April. My name is Carl Capolingua. I'm the market analyst over here at Think Markets, and it is a pleasure to be with you as we recap all the big moves from last week and look ahead to the week that will be. Before we do that, the Think Markets difference, which is substantial. You know the drill. $8 flat rate trades, your own holder identification number, no platform fees, unlimited support, 4 fantastic reasons why your next ASX share trade is with us. Hey, if you're not already a client, make sure you become one before June 30, because another 5 reasons why you should trade with us. 5 free trades for new clients before June 30. The agenda for today is to check out the big moves from last week. We're going to do a very, very quick crypto update. We'll check out the key macroeconomic data for last week. And new from this week, we're going to do an ASX focus sector. So the sector which I think will perform the best this week, and a couple of interesting stocks within that sector. Then we'll check out what the brokers said about ASX stocks last week, see where the value is in the Australian market, some of the key technical factors, and then have a look to the calendar for the week ahead. Just this week, we don't normally talk about cryptos in this space. It's more of a stocks-oriented session. But just for this week, I thought I'd slip in this chart of Bitcoin, which you can see standing out like a sore thumb at the end there is this giant, big, black candle indicating quite a sharp drop. Now, this is the Sunday candle. It's still live, and we're up at around about 56,500 at the moment. Because obviously I have to take this snapshot at some stage before we start the presentation. And it's moving quite quickly. Now, what happened? Well, on Friday, late sort of evening Sydney time, the Turkish Central Bank actually came out and banned the use of all cryptocurrencies as payments from the end of the month. Now, there's been rumours circulating that some central banks, some governments around the world, particularly India, little rumours about the US, that they were thinking about doing this. Turkey's the first one to actually come out and do it, so it does undermine, that confidence in cryptocurrencies in general. I mean, yes, I've owned these things, but will the central government allow me to buy things? Not a big deal if you're a drug cartel or a criminal syndicate. You're going to keep doing those transactions. But if you want to go buy a cup of coffee with your Bitcoin, that's a bit more of an issue. So we have seen the price come off, or at least it started to fall on that. The big news, which I think precipitated the bulk of the decline, was a power outage in northwestern China. And you might say, what has that got to do with Bitcoin? Well, Bitcoin requires calculations. It requires some 200 odd quintillion calculations per second to keep the Bitcoin network going, to facilitate the verification of the blockchain and transactions that occur on the blockchain. And of course, they need to be done by computers. Computers need power, and a lot of those calculations are happening in China. It's all part of this Bitcoin mining process, where you get rewarded for maintaining the network with these calculations with a Bitcoin at some stage. Requires about 72,000 gigawatts to mine just one Bitcoin. When the power goes off, those calculations stop, and basically there's less support for the network. Now, nothing bad happened in the network. There was plenty of, bandwidth, if you want to call it something we might understand, to keep the network going. But of course, if the power goes out and this occurs, then it does undermine, and I've said this word a couple of times, undermine the confidence in the concept. So it wasn't just Bitcoin that fell very sharply. We saw really the whole crypto complex down by about 15 to 20%. Lots of factors at play at the moment. It's a very fluid situation. Long story short, I think if you're owning some of these cryptocurrencies right now, I wouldn't necessarily jump out just because of what's happened today. We have seen these sorts of sharp drops before. That one because there was a rumour that India was going to ban it. This one here, I think Yellen had something to say, and so on and so forth. So yeah, each time it's come back quite strongly, and that's what we need to watch right now. So we're watching very closely over the next few days to see if we get some sort of string of white candles to tell us that the worst is behind us. Hey, if this red dot here ends up being down here, then watch out. Okay, so black candles will demonstrate the supply remains, and we're probably going to see the end of the trend. But if we can get those lower shadows and white candles, then we're probably still going to continue in this trend in the very short term. But hey, I'm sure I'll pop up somewhere to update you on that as we go forward. But a very interesting situation, and it all occurred over the weekend. Looking a little bit further back than the weekend, what happened last week on the Australian market? Some pretty good moves there, 1% overall for the index. But gold up 2.3%. We talked about the gold chart last week and how it's recovering. I gave you some gold sector picks. Information technology, the standout, up 4.35%. We also talked about last week about this switch back into growth. I've got a chart for you today to update on that one. Certainly the Australian tech sector outperforming the US tech sector, which is quite interesting. Materials did really well. Commodities were higher almost across the board. Underperforming the energy sector, which is unusual because oil prices were up and up quite strongly, and utilities also quite poor. But there was a profit downgrade during the week from Origin Energy, which kind of straddles both sectors. I'm quite sure it's actually in the energy sector, but because it's a utility stock or has utility sort of characteristics, it then by default impacts a lot of those utility stocks as well. So that's explaining why that was down. Discretionary sector just keeps chugging along. We'll talk about that one a little later on as our sector of the week. The bond yields, the Australian bond yields, so we're just keeping a track at the moment on how these yields are going, because through here it did have quite a negative impact on our Aussie market, and through here, as it's been easing off and some of the panic of this big rises sort of ebbing out of the market, it's facilitated that big breakout to the upside. So that's great. Look, Aussie yields up just a tiny bit for the week, but I think the general trend is down. I think that's why our markets are pretty happy. We don't necessarily want them to break rapidly below that 1.6 level because don't forget, bonds are a flight to safety instrument. Bond prices work inverse to yields. So if we saw yields come down, that means bond prices are going up, okay, and that would mean people are more nervous about the market. So it's not one of those things where yields went up and markets got really cranky, so yields come down, that'd be good for markets. We just want them to probably hover around 1.5 or 1.6 for the foreseeable future, and that would be a big smiley face for stocks. Which leads us into the next slide. And hey, plenty of smiles here. I think this is kind of a smile here, isn't it, for investors as we continue to go up. I'm getting silly now. Let's get rid of that stuff. You know what? This is often called like a cup and saucer pattern, isn't it? That's a valid technical pattern there. So we'll leave that on. But we have broken through that 69.38. That was a very, really pesky level for a couple of months. Support and resistance, basic techniques here. So an old area of resistance should act as an area of support going forward. And we do have the dynamic support also coming in from our moving averages. I would expect us to continue to work our way above this zone going forward. We are no doubt going to have a little bit of resistance kicking in around that 71.97. We could look at that this week. That would be nice. Futures are pointing higher this morning. But as long as the green bit is pointing up and remains green and the candles remain white, I'm pretty happy. We would be watching closely around this level for a potential supply event. Supply event would be sort of a black candle that might look like this or like this, and then that would give us some reason to, I guess, reconsider our current bullish stance on the market. Until we see those, happy to ride the trend higher. Having a look around the world, pretty quiet in Asia, a little bit of a mixed bag there. Quite strong and continuing to be quite strong in the US, with the S&P 500 up about 1.4%, the NASDAQ up about 1%, maybe that lagged a little. Good to see volatility coming down, and Europe collectively moving higher. So we've got this, sort of synchronized growth in equities markets at the moment. I talked about the idea of a supply event, and until we see one somewhere on the S&P 500, I think it will continue to trudge higher, much like it did here, not so much there, but, supply events, they kind of look like that, or they look like that, or they look like that. And just let the chart really tell you what investors are doing more broadly. Having a look at the NASDAQ versus the Russell, and this is our sort of growth versus value. So the NASDAQ is our proxy for the growth, and the Russell 2000 is our proxy for value. When the this particular line is heading up, it means a rotation into growth. When the line is heading down, it is a rotation into value. So we'll call that value is dominating, we'll call that growth is dominating. And more recently, we've seen a little rotation back to growth. It paused a little bit last week. I said maybe the NASDAQ underperformed. Look, nothing too sinister there. I do note that the Australian tech sector really did outperform to the upside. And yeah, look, until I see a big change there, happy to focus a little bit more on the growth side of the equation going forward, if that helps sort of adjust what you're focusing on this week. Having a look at the commodities, very, very strong moves, just nickel and steel missing out, but 2 to 3% to the upside. Great to see the iron ore price continuing to show signs of immense strength, up 2% in China, 2.5% in the US, copper up 3%. Dr. Copper, of course, that's always good for the global economy. Precious metals up across the board as the US dollar in here weakened. That always helps the Australian dollar on the back of those commodity increases and the oil increase heading up. As we said, bonds edged a little higher in terms of their yields in Australia, but really staying around that low base there around 1.6, and US yields did actually come down. Having a look at where we're tracking this time around compared to last time around. So this is the pandemic recovery versus the GFC recovery, and we are uncannily close, crazily close. There's no reason for these lines to be, this lockstep together. It's just a bit of a fun thing that we do on Mondays, and we speculate whether we're going to follow and maybe do this and then do that. At least we've probably got a little bit of time before we need to decide. Moving along, plenty to get through today, so I am going to pick up the pace a little. National Australia Bank Business Confidence Survey for Australia out during the week. Current conditions taking a big pop, I guess, as those spot lockdowns work their way out of the system, but confidence down slightly, but still very much in the green, and I think overall trends still pretty strong there. The Consumer Sentiment Index almost moving off my chart, I think. It's a record level. I'd have to check my notes, but something like that. There were improvements across all of the subcomponents of there and across all of the states. So that's very, very impressive, and you can see there 111 to 118 is a nice pop-up. So on the local front, businesses are confident, consumers are confident, and we're seeing that flow through to the Australian share market. Having a look at the unemployment data, this was a little bit of a mixed bag. We'll take it overall as a positive because you can see full-time is the red there. We can actually see full-time workers down for the last month, but more than enough, if that's the right way to put it, offset by part-time positions to give us a total of 70,700 jobs created net for the month. That was down a little from the blistering rate set in February, but well ahead of what the market was expecting there, 35,000 jobs. The unemployment rate ticking down again to 5.6% from the previous 5.8%, and the participation rate continuing to move up. And, tick, question mark, but tick here overall, some very, very good numbers, I'd suggest. Having a look at China, we had a massive data week in China. We'll just look at the numbers and the comparisons, I guess. Down a little on M2 money supply and loans, a little bit of a downtrend developing there. So this is the amount of credit in the economy. Obviously, more credit, more growth, and more specifically here, new loans 2.7. That was actually up 2.7 versus 13.6. We'll call that an uptrend. So a bit of a mixed bag there. Trade balance, there's some impacts there of obviously Chinese New Year, but all heading in the right direction. Exports up, imports up. Long story short, economy firing on all cylinders is probably the way to look at that one. Fixed asset investment still very, very strong, no doubt, down slightly from the previous month though, and a little bit behind expectations. Industrial production, once again, very, very strong. That's incorrect because of the Chinese New Year break in there. Still strong, but below expectations. So we're seeing a few below expectation prints here. Here's one here on consumer goods retail sales. That was actually ahead of expectations and 34%. You might be saying, well, these are some pretty crazy numbers here, Carl. What's going on? These are year-on-year comparisons. So if you go back 12 months, we were in the middle of coronavirus. So that's why you've got these massive, massive numbers. If you look on a month-to-month basis, not as good. And that's an interesting little negative there for the Chinese economy that we will continue to watch. The unemployment rate ticking down again. So sort of drilling down past these big numbers in the headlines and these year-on-year comparisons, quarter-to-quarter growth there in Chinese GDP was up about 1.6%, but that's slower than the previous quarter's change for about 3%, and it was actually below expectations. So let's not focus on that so much. We know that at the moment there's a big focus on inflation and whether it's showing itself in the economy. Last week we talked about some massive blip ups in the producer price index. We said, is it going to flow into consumer price index? And indications are not yet. So the US CPI at 0.3% on the core, that was a little bit ahead of expectations and obviously the previous ones, but I don't think we can call that runaway inflation at this stage. Retail sales came in better than expected, but again, some base effects there because we had the big whiteout in some of those southern states. So when you come back online, it looks better than it probably actually is, but nonetheless better than expectations. I think that's the comparisons you need to look at. The National Association of Home Builders Index, the home builders' confidence held steady, but housing permits and starts on the rise. And so we're going from, say, 1457 to 1739. We're going from 1720 to 1776, and ahead of expectations in both cases. This is a major powerhouse of the US economy. So definitely worth keeping an eye on that. So good news there. Also good news on the weekly jobless claims front. So that is the lowest print we've had since the start of the pandemic. Now, the typical sort of weekly claims is somewhere sort of between 200 to 250,000. That's what we're doing pre-pandemic. So you can still see we're double that. So it's not normal yet, but we are seeing an improvement there. Continuing claims are down to about 3.7 million, but there's still about 18 odd million Americans claiming some form of unemployment insurance. And that's about sort of 8 to 10 million more than pre-pandemic. So still plenty of work to do there. And that's why the Fed keeps going on with this rhetoric of great work's been done, but there's still a long way to go. Consumer sentiment index. This is a very interesting one because unlike our consumer sentiments, which is through the roof and getting better, US consumers have been a bit slower to respond, but we're starting to see that turn higher. So that's a very interesting print, probably the most interesting print for the week, moving to 86.5 from 83, but it was a little bit worse than expected. Okay, sector of the week. Looking at my time, we're way behind consumer discretionary sector. Why? Well, we just looked at that consumer confidence number for Australia. We looked at the business confidence. Businesses are only going to be confident if they're seeing the tills ringing, the growth coming in, and that's because the consumers are doing well. So I think there's some great signals there for the Australian market that this sector can continue to do well. And many of the stocks in this sector, like Breville Group is a fantastic stock. It's not in this list, but it could well be. Just using it as an example because it's got great overseas exposure as well. So we saw that US consumer sentiment number coming through. So great sector, some really quality stocks in it. I'm going to talk about a couple today. Ardent Leisure is more about that reopening play. We've got this travel bubble with New Zealand that's starting today. So I think it's in the right place at the right time to take advantage of just gravitation back to getting out there and having holidays in Australia. APE, which is Eagers Automotive, fantastic looking chart. This is making a play on the sort of move back to personal transport rather than public transport. Nick Scali, which is probably the best quality stock on the entire ASX, fantastic yield, fantastic return on equity, and not expensive at all. It's got a P of about 10. Looking at the technicals, we can see that the short-term trend is just about to turn up. Long-term trend well established, and we've had a pretty good pullback to that long-term trend zone. Some nice candles coming in, double bottom with a high bottom pattern and moving out. Friday's quite a pivotal candle, I think. It's just confirming that the long-term trend is resuming. So we're not paying the top price here from a couple of months ago, but I think we're getting it a really good value sort of base price compared to the broader trend. And it makes sense that this is more of a core portfolio holding than say a more speculative stock pick. Next one, I think could also fall into that category of a core portfolio holding. Yes, it's also in the consumer discretionary sector like Nick Scully, but they're in very different segments of the sector, obviously. One doing furniture, one doing fashion, and fashion for young people more specifically. So you may not have noticed these stores as you walk through the shopping malls, but no doubt your kids or your grandkids have probably dragged you into one because they do the latest and the hottest fashions really for anybody sort of under 25. And it's one of the reasons why they've done so well through the pandemic, because I guess that sector of the consumer has continued to spend away, and we did see some incredible growth during that COVID period, but there was growth in the business before that, and I expect there to be growth in business after that. Apart from that, the stock not expensive by any means at all, looking sort of mid teens in terms of their PE, but some nice growth in the business and a fairly reasonable dividend yield as well. Chart looks fantastic. Short-term trend is clearly up. Long-term trend, we actually don't have one just yet because it's a fairly new issue listed in November 2020, if I'm not mistaken. And I think the key here is this fantastic set of candles that we have and great price action as well. We were sort of just logging those higher peaks and higher troughs. The two lower shadows here, I think, indicate tremendous demand, latent demand in the system around that 680, and therefore happy to buy on the basis of the quality of the stock and the very, very strong trend. Okay, switching gears now and checking what brokers had to say about ASX stocks last week, and there is a more detailed analysis of this data in our weekly broker moves review, and that's on the website under Friday's updates. For now, we'll just have a brief and broad overview. Looking at the upgrades, looking for themes, basically. Interesting to note a couple of lithium stocks and some news out on these two stocks today. Orocobre is proposing a merger. Or really, it's more of a takeover, but they're kind of calling it a merger, where the two companies would join forces. So that is tremendously interesting, and within the context of some of the broker moves last week, where brokers upgraded their spodumene price estimates going forward, and that underpins some of these really, really large price target increases for the stocks. Mineral Resources, which will go into the next slide, also has significant lithium exposure, and that got the benefit there as well from Citigroup of a pretty big upgrade in their target price, but I reckon they were just a little bit behind the curve in that price target previously. But hey, nonetheless, we still have a buy on that one and an outperform from Macquarie on both Galaxy and Orocobre. It'll be interesting to see what the brokers say about that merger this week. Not so lucky Whitehaven Coal, which had a very poor quarterly report, impacted mainly at its Narrabri coal mine, although brokers were comfortable that thermal coal prices have turned the corner and that would support going forward. Looking at Regis Resources next, they announced that they would buy IGO's 30% stake in the Tropicana gold mine, and brokers said basically they paid too much for it. I'll let you press pause and have a look at the rest of those. We'll keep moving though and check if there is value in the Australian market. At 18.68, the Aussie market is not exactly cheap, but at least it's cheaper than the rest of the world. Where is the value in the market? Materials sector with a PE of 11.9 is still the cheapest sector, and that is actually down from where it was a month ago. Financials and energy are probably the next cheapest too, and then they fall away from there. In terms of participation in the rally, so how many stocks are participating in this current rally? We have roughly 65%, almost 2/3 of stocks above their 1 week moving averages. But as we move out and check some of those longer term moving averages all the way out to 1 year, we can see that we get up to really over 70% of stocks in the ASX 300 showing uptrends at the moment. So that's very good. It's certainly better than where we were at the green line, which is the pre-COVID high. So that's the market at 71.97. We're actually better than that. Similar to where we were a week ago, which is that yellow line. You can see a little bit of pullback in some stocks during the week, though better generally than where we were a month ago, and way above, distant memory now, those COVID lows. Okay, looking to the economic data coming out this week, we have Australian retail sales. That's by far and away the biggest data release for the week, and then closing out the week with some services and manufacturing PMIs. Having a look abroad, we have an ECB monetary policy statement on Thursday. Other than that, pretty quiet for the week. Weekly unemployment claims out in the US, and then closing out the week with corresponding services and manufacturing PMIs for Europe and the US. New home sales on Saturday morning, our time. Okay, well, that's it for me today. You can catch all of our other market updates in our market news section of the website. You can follow me or the Think Market handles if you prefer. On Twitter on Wednesday, I'll be bringing you the top 3 ASX turnaround stocks. I won't ruin the surprise. You'll have to tune in on Wednesday to find out. Now, to do that, you do need to go to the website, find the webinars registration page and get your details in. Next week, we'll have Ask the Experts, where you get to bring your portfolio to the table and I'll give you on-the-spot analysis. And then following after that, we'll have our fundamental analysis refresher. The disclaimer before I leave you today says that everything we've discussed is general in nature. We are a regulated Australian broker. We do have some products that could see you lose more than your deposit. So please consider everything in this disclaimer very carefully. Or if you have any questions at all, please give us a call. Thanks for joining me this morning. Hopefully got lots out of it. All the best for your trading until we catch up again. Bye-bye for now.